Story is already covered yesterday, no?
Yes, sir.
Now start solving some problems on provision for bad debts. Write down extract of a trial balance. Extract of trial balance 31st March 2014. Particulars: debit, credit. Debtors: debit balance 20 lakhs. Close the trial balance. Adjustments, additional information. Create provision for bad debts at the rate of 5% on debtors. So we have to now create a provision for 5% on debtors. Note down the problem. You are given extract of a trial balance on 31st March 2014. Debtors, debit balance 20 lakhs. Adjustments, create provision for bad debts at the rate of 5% on debtors. So if you are given such kind of a trial balance, how are you going to deal with it? Okay. Now what you will do is open a small profit and loss account. Debit, credit. Open bad debts account. Debit, credit. Open provision for bad debts account. Open provision for bad debts account, and also open a small balance sheet. So please open a small P&L account, a small bad debts account, a small provision for bad debts account, and then a small balance sheet. Let us see how we are going to deal with it. Debtors given in the trial balance, how much? 20 lakhs. Balance sheet, you will write debtors, inner column, balance sheet asset side, inner column 20 lakhs. Balance sheet asset side, inner column, you write 20 lakhs. Don't write it in the outer column, write it in the inner column, 20 lakhs. Next, what are we saying? Create provision for bad debts at the rate of 5% on debtors. You have to create a provision for bad debts at the rate of 5% on debtors. How are you going to create the provision?
To P&L account, debit side.
Write down working note. Calculation of the amount to be transferred to provision for bad debts account. You prepare a working note. Calculation of the amount to be transferred to provision for bad debts account. Underline. Below that you write step 1. Step 1. Debtors in the balance sheet. Debtors 20 lakhs. Step 2. Total provision required. Total provision required. Total provision required. 5% of step 1. Total provision required. 5% of step 1. 5% of 20 lakhs. 20 lakhs into 5%. It is how much? 1 lakh rupees. Total provision required 5% of 20 lakhs, 1 lakh rupees. Step 3. Existing provision. Existing balance in provision. Existing balance in provision. How much balance exists in provision? Right now we don't have any balance. Opening balance is 0. Utilized is 0.
Zero.
So right now existing balance in the provision account is 0. Okay. Step 4. Step 2 minus step 3. Step 4. Step 2 minus step 3. Step 2 is how much? 1 lakh. Step 3 is 0. Answer is 1 lakh. This is the provision totally required, 1 lakh. This is the current provision available, 0. That means we have to transfer entire 1 lakh rupees from the profit and loss account to the provision for bad debts account. Okay. If the answer for step 4 is positive, that means there is a shortage in provision. To fill up the shortage, you have to debit the profit and loss account and you have to credit the provision for bad debts account. Is it clear? Are you to understand?
Yes, sir.
If the answer for step 4 is positive, that means there is a shortfall in provision. So P&L account should be debited and provision for bad debts account should be credited. If the answer is in negative, that means there is an excess provision. You have excess provision more than what is required. In such case, that excess provision should be credited to the profit and loss account. Okay. So below step 4, you pass an entry. P&L account debtor to provision for bad debts. P&L account debtor to provision for bad debts. 1 lakh. P&L account debtor to provision for bad debts. 1 lakh. If the answer for step 4 is positive, P&L account should be debited. If the answer for step 4 is negative, then P&L account should be credited. Okay. If answer for step 4 is positive, plus means you have to add it to provision, deduct it from P&L account. If the answer for step 4 is negative, that means you have to deduct it from provision and then credit the profit and loss account. Is it clear? So what entry are going to pass? Profit and loss account debtor to provision for bad debts. Give a posting of this entry. P&L account you write to provision for bad debts. How much? 1 lakh. Provision for bad debts account you write by profit and loss account 1 lakh. P&L account is debited, provision for bad debts account is credited. Okay. You can just put a double underline and leave the account because we don't have other items to calculate net profits or losses. Okay. Bad debts also we don't have any information given in the problem, hence it is just balanced and left. Provision for bad debts, it's now showing a closing balance of how much? 1 lakh. Balance it. Carry it down 1 lakh. Brought down 1 lakh. Provision for bad debts. Carried down 1 lakh. Brought down 1 lakh. So now provision for bad debts can be either shown under debtors as less from debtors, or it can be shown on the balance sheet liability side. We normally show it here, less provision for bad debts 1 lakh rupees. Outer column will show 19 lakhs rupees. 1 lakh rupees is shown in the inner column as subtraction from debtors. Outer column we are going to show 19 lakh rupees. But remember, next year when we pass an opening entry, debtor account will reopen with full debit balance 20 lakh. Provision for bad debts account will reopen with full credit balance 1 lakh. Just for disclosure purpose we show it as subtraction because we want to tell the users out of 20 lakh which we are showing as debtors how much we expect to collect. So the meaning of the information is out of 20 lakhs we expect that 5% will not be collected. We are expecting a loss of 1 lakh and we expect to realize 19 lakh rupees. It's only an expectation which we are informing the shareholder or the users of the financial statement. Is it clear? But actually these accounts are two separate accounts which will reopen with full balances in the next accounting period. Is it clear everyone?
Yes,
Next problem. Extract of a trial balance. Extract of a trial balance. Particulars, debit, credit. Now this is trial balance for 2015 which I am giving you now. Trial balance for 2015. Debtors, debit balance 30 lakh, bad debts, debit balance 50,000 rupees. Debtors, debit balance 30 lakh rupees, bad debts, debit balance 50,000 rupees. Adjustments. Number 1, maintain provision for bad debts at the rate of 5% on debtors. Wait, we are given one more information also. Provision for bad debts, credit balance 1 lakh. This is the trial balance. Debtors, debit balance 30 lakh. Bad debts given inside the trial balance 50,000. Provision for bad debts. Provision for bad debts. Credit balance 1 lakh. Maintain provision for bad debts at the rate of 5% on debtors. We are given the next year's trial balance. Now how to complete this problem? Again open the same accounts. Profit and loss account, bad debts account, provision for bad debts account, and then balance sheet. Open all the accounts, profit and loss account, bad debts account, provision for bad debts account, and balance sheet. Now how are you going to deal with it? Debtors, where do you show debtors? Balance sheet, asset side. Debtors, 30 lakhs rupees. Balance sheet, asset side, inner column. Balance sheet, asset side, inner column, 30 lakhs. Okay. Then bad debts is showing a debit balance of 50,000. Come to bad debts account, right here, to balance brought down 50,000. Bad debts, debit balance, to balance brought down 50,000. Provision for bad debts, credit balance 1 lakh, buy balance brought down 1 lakh. Buy balance brought down 1 lakh. Next, maintain provision for bad debts at the rate of 5% on debtors. How are you going to maintain provision for bad debts on 5% on debtors? Now, before we deal with maintaining provision for bad debts, see how much bad debts is appearing in your account. Bad debts account is a balance of 50,000. Where should you transfer the loss? Should you transfer it to P&L account, the general graveyard, or should you transfer it to the special graveyard? There is a special graveyard. So transfer this to the special graveyard for it. So transfer this loss to the provision account. What is the entry you pass to transfer this loss to the provision? Bad debts account is credited, provision account is debited. What is the entry you pass? Provision for bad debts account to bad debts account. What is the entry you pass? So pass an entry. Below the balance sheet you will pass an entry. Provision for bad debts account debtor to bad debts account. How much? 50,000. Provision for bad debts account debtor to bad debts 50,000. Bad debts account will be credited by provision for bad debts 50,000. Provision for bad debts account you will write to bad debts 50,000. Provision for bad debts account you can give a debit to bad debts 50,000. Bad debts account you can write a credit by provision for bad debts. With this the story of this account is over. Now we have to maintain a provision. We have to now maintain a provision. See the adjustment. Maintain provision for bad debts at the rate of 5% on debtors. Now look at the board. Existing provision 1 lakh. Provision consumed, already used 50,000. How much is available? 50,000. There is a provision available to the extent of only 50,000 rupees. Yes. Out of 1 lakh 50,000 is used up. So there is a balance of only 50,000. What is the data shown in your balance sheet? 30 lakhs. On that, how much loss are you expecting? 30 lakhs into 5%. 1,50,000. Loss expected 1,50,000. But the provision has a balance of only 50,000. So there is a shortfall of how much? 1 lakh rupees. So how will you meet the shortfall? Debit profit and loss account. Credit provision for bad debts account. Now again write the same working note. Write down working note to calculate. Working note to calculate the amount to be debited or credited to the P&L account. Working note to calculate the amount to be debited or credited to the P&L account to maintain necessary provision. Write down the heading properly. Calculation of the amount to be debited or credited to the P&L account to maintain necessary provision. Step 1. Tell me the steps now. Debtors. How much is the debtors shown in the balance sheet? 30 lakhs. Debtors shown in the balance sheet 30 lakhs. Step 2. Total provision required. Total provision required. 5% of step 1. Total provision required. 5% of step 1. 5% of 30 lakhs. 30 lakhs into 5%. How much is it? 1,50,000. So we want totally a provision of 1,50,000. Step 3. Existing balance. Existing balance. Look at the board. Out of 1,50,000 is consumed. So right here 1 lakh minus 50,000. There is a balance of only 50,000. Existing provision 1 lakh minus 50,000. There is an existing provision of only 50,000. I'll write the step 4 here. Step 4. Step 2 minus step 3. Step 4. Step 2 minus step 3. Before we go to step 2, step 4. Look at the board. For 30 lakh debtors, we expect a loss of 1,50,000. So this should be the total provision we should have. But we already have a provision of 50,000. So there is a shortfall in the provision. We want 150, but we have only 50. So we have to bring 1 lakh from what? From the profit and loss account. Step 4, step 2 minus step 3. It is 1,50,000 minus 50,000. Answer is 1 lakh. Positive. I told you what do you mean by positive? If the answer is positive, plus means add to provision. Deduct from P&L. Provision account shows a credit balance. If you want to add it, provision account should be credited and P&L account should be debited. So write down the entry. P&L account debtor to P&L account debtor to provision for bad debts 1 lakh rupees. P&L account debtor to provision for bad debts 1 lakh rupees. P&L account will be debited to provision for bad debts 1 lakh. Provision for bad debts account will be credited by profit and loss account 1 lakh. I have given posting of that entry. P&L account is debited, provision for bad debts account is credited. Now balance the provision for bad debts account 2 lakhs. 2 lakhs minus 50,000. There is a closing balance of 1,50,000 carried down, 1,50,000 brought down, 1,50,000. So provision account has a closing balance of 1,50,000. Now you will show provision account in the balance sheet. Either you can show it on the liability side or you can show it as subtraction from debtors. Less provision for bad debts 1,50,000. Outer column you will show 28,50,000. Clear everyone? Take down the next trial balance. Extract of the trial balance 31st March 2016. Debtors 40 lakhs. Bad debts 1 lakh. Provision for bad debts 1,50,000. Next problem. Extract of a trial balance 31st March 2016. Debtors showing a debit balance of 40 lakh. Bad debts showing a debit balance of 1 lakh. And provision for bad debts showing a credit balance of 1,50,000. Adjustments. Maintain provision for bad debts at the rate of 5% on debtors. Let us start again. Open those 4 accounts. Open profit and loss account, a small bad debts account, provision for bad debts account, and then balance sheet. Ready everyone? Debtors, we will show it in the balance sheet. Asset side, inner column, debtors 40 lakhs. Debtors, balance sheet, asset side, inner column 40 lakhs. Bad debts 1 lakh. Where do you show bad debts? Open bad debts account, there you write balance brought down 1 lakh. There is an opening balance of bad debts up to the extent of 1 lakh. These are actually bad debts of the current year. That is for the year 15-16. Some debtors did not pay money. These are the bad debts incurred during the current year. Okay. Provision for bad debts. Credit balance 1,50,000. Provision for bad debts. By balance brought down 1,50,000. Provision for bad debts. Credit side by balance brought down 1,50,000. Adjustments. Maintain provision for bad debts at the rate of 5% on debtors. Now what will you do? Now before you maintain provision of bad debts, what should you do? Show the loss in the special graveyard. This graveyard is done for this dead body, no? This is a dead body, nominal account. This graveyard is made for this dead body. So transfer this dead body to this graveyard. What is the entry you are going to pass? Provision for bad debts account debtors to bad debts account. Pass an entry. Provision for bad debts account debtor to bad debts account. If the special graveyard is not there, then you are going to debit the general graveyard, public graveyard, profit and loss account. All nominal accounts will come and die in the P&L account, no. Hence I call it as the graveyard. All accounts which have to be kept alive are shown where? Balance sheet. Balance life is there. So now how will you close this account? So give a posting by provision for bad debts 1 lakh. Provision for bad debts account you write 2 bad debts 1 lakh. By provision for bad debts 1 lakh. Provision for bad debts account you write 2 bad debts 1 lakh. Okay. Now we have to read the adjustment. Maintain provision for bad debts at the rate of 5% on debtors. Now see the balance sheet. Debtors is shown at 40 lakh rupees. We have to maintain 5% provision. So we have to maintain a provision for 2 lakh. The total provision we have to maintain is 2 lakh rupees. But right now how much we have? 150 minus 1. That's a provision of only half. 50,000 rupees we have. 150 minus 1 lakh is 50,000. Don't solve when I am explaining. What's your name? You. Look at the board when I am explaining. Out of 150 we have used 1 lakh. There is a balance of 50,000. But we want totally how much? 2 lakhs. We only have 50,000. So we have to provide from P&L account how much? 1 lakh 50,000. Provide from. So you have to remove from P&L account. Now I think I have already taught you a working note how to calculate the amount to be debited or credited to P&L account. Write down. Working note. Calculation of the amount to be debited or credited to P&L account to maintain necessary provision. Calculation of the amount to be debited or credited to the P&L account to maintain necessary provision. Write down the heading of the working note. Calculation of the amount to be debited or credited to the P&L account to maintain necessary provision. Step 1. What is step 1? Debtors. How much? 40 lakh. Step 2.
5%.
Total provision required.
5% of step 1.
Total provision required. Very good. 5% of step 1.
40 lakh.
It is 40 lakh into 5%. 2 lakhs.
2 lakh.
Step 3.
Existing balance.
Existing balance. Existing balance in provision. Look at the board. 1,50,000 minus 1 lakh. So there is a balance of only 50,000. Existing balance is only 50,000. 150 minus 1 lakh. Step 4. I think you know how this existing balance has come. 1,50,000 minus 1 lakh. There is a balance of only 50,000. Step 4. Step 2 minus step 3. Step 4 is step 2 minus step 3. 2 lakh minus 50,000. It is 1 lakh 50,000. Again positive. It is positive 1 lakh 50,000. What did I tell you? If it is positive, we have to add it to provision. Subtract from P&L account. So we have to pass an entry. What is the entry we are going to pass? Profit and loss account debtor to provision for bad debts. Pass an entry. P&L account debtor to provision for bad debts account 1 lakh 50,000. Now go to P&L account. You write here to provision for bad debts 1 lakh 50,000. Provision for bad debts account you write by P&L account 1 lakh 50,000. P&L account give a debit. Provision for bad debts account give a credit. Now we can balance the provision account. We can close P&L account. Close bad debts account. Provision for bad debts account. Credit side total is 3 lakh. 3 lakhs minus 1 lakh. It is a balance of only 2 lakh. Carried down 2 lakh. Brought down 2 lakh. Carried down 2 lakh. Brought down 2 lakhs. Carried down 2 lakh, brought down 2 lakh. So here you write less provision for bad debts. How much balance is left? 2 lakh. You will write here 2 lakh. Outer column you will write 38 lakhs. Final account chapter is very long, very important also. 38 lakhs. Did you all write this?
Yes, sir.
Next trial balance. Extract of a trial balance 31st March 2017. March 2017. Debtors. Debit balance only 10 lakh. Bad debts. Debit balance only 50,000. Provision for bad debts. Credit balance 2 lakh rupees. This is what is given inside the trial balance. This is what is given inside the trial balance. Maintain provision for bad debts at the rate of 5% on debtors. Adjustment. So you have a debtor balance of 10 lakh, bad debts balance of 50,000, provision for bad debts balance of 2 lakh. Maintain provision for bad debts at the rate of 5% on debtors. Let us start. Where will you show debtors? Debtors will be shown in the balance sheet, asset side. Debtors, balance sheet, asset side, inner column, 10 lakhs. Be quick. Bad debts. Where will you show bad debts? Bad debts account, debit side, balance brought down. How much? 50,000. Bad debts, balance brought down. These bad debts occurred during the years 16-17. During the current days of debtors did not pay money, we wrote the entry bad debt account not to debtors. That is the value is coming in the trial balance. Provision for bad debt showing a credit balance. By balance brought down. How much? 2 lakh.
2 lakh.
Provision for bad debts. 2 lakhs. Credit balance of 2 lakhs. Now, before we read the adjustment, let us transfer the loss to the graveyard which is dug for it. Transfer the bad debts loss to the provision for bad debts account. So, what is the entry? Past transfer the loss to the provision account. Provision for bad debts account debtor to bad debts account. Provision for bad debts account debtor to bad debts account 50,000. Provision for bad debts account debtor to bad debts account 50,000. So provision for bad debts account should be debited, bad debts account will be credited. By provision for bad debts 50,000, provision account debit side to bad debts 50,000. Provision account is debited, bad debts account is credited. With this account will be closed. Now read the adjustment. Maintain provision for bad debts at the rate of 5% on debtors. See the balance sheet asset side. Debtors balance how much? 10 lakh. On that you have to maintain 5% provision. That is, we need a provision of 50,000. What is the balance existing already? 2 lakhs minus 50,000. There is an existing balance of 1,50,000. But we need totally only 50. We need 50. We have 150. What we should do? Excess provision should be returned to the profit and loss account. Working note. Calculation of the amount to be debited or credited to the profit and loss account. Calculation of the amount to be debited or credited to profit and loss account to maintain necessary provision. Calculation of the amount to be debited or credited to the profit and loss account to maintain necessary provision. Step 1. What is step 1? Debtors balance. How much is the debtors balance? 10 lakh. Step 2. Total provision required. Total provision required. It is 50,000 only. How is it 50,000? 10 lakh into 5%. It is 50,000 rupees. Step 3. Existing balance. Existing balance. How much is existing balance? Out of 2 lakh, 50,000 is consumed. So there is a balance of 1 lakh 50,000. Out of 2 lakh, 50,000 is being consumed. So there is a balance of 1 lakh 50,000. Existing balance. We need 50. We have 150. There is an excess. Step 4.
Step 2 minus step 3.
Step 2 minus step 3. 1 lakh. Sorry. 50,000 minus 1 lakh 50,000. Negative 1 lakh. Negative 1 lakh means what?
Excess.
We have excess of provision for bad debts, which has to be now returned to the profit and loss account. So minus means minus from what? Minus from provision and plus to P&L account. So what is entry we pass? When you take from P&L account, what is entry you pass? P&L account debtor to provision for bad debts. When there is an excess, we pass a reverse entry. What is entry you pass? Provision for bad debts account debtor to P&L account. Provision for bad debts account debtor to P&L account. Provision for bad debts account debtor to P&L account. How much? 1 lakh rupees. Till now in the last 3 problems we were writing the entry P&L account debtor to provision because there was every time there was a shortfall. This time we have an excess provision. So excess provision is returned to the profit and loss account. We pass an entry provision for bad debts account debtor to P&L account. Give posting. Provision for bad debts account is debited to P&L account. How much? 1 lakh. P&L account is credited by provision for bad debts 1 lakh. So we have returned the profits to the P&L account now. Earlier we have removed profits. Now we are giving back the profits to the P&L account now. Is it clear everyone? So now just draw 2 lines here and leave it. Bad debts account is already closed. Balance the provision for bad debts account. 2 lakh minus 1 lakh 50,000 carried down. Balance of 50,000 brought down 50,000. Carried down 50,000, brought down 50,000. Come to balance sheet. Less provision for bad debts 50,000. Outer column 9 lakh 50,000. This is how we deal with provision for bad debts. Problems are not over yet. We will discuss few more problems on provision for bad debts, and we will also discuss few more problems on provision for discounts also in our next class. Okay. With that, we will be coming nearly to an end to the topic final accounts. Okay.